This is an Equity Mates investing podcast where we're doing a deep dive on a company. Today we're doing Disney. All right, Ren, so where do we want to start?
So I've got a trivia question to start.
Okay.
Now this information comes from Forbes, so don't come at me if someone wants to fact check it.
Yeah.
But only one of Disney's 30 highest grossing films of all time is not a sequel or doesn't have a sequel. Can you guess it?
I have a feeling it's going to be two options, and I don't actually know if either of these options are Disney, but...
Okay.
And these are actually quite recency biased, because Harriet, my wife, loves Disney, and we've watched a couple of these, both of these recently. It's either going to be Mulan, or, and I don't know if that's Disney.
It is Disney.
Okay. Or the one with the... I don't know what it's called, but I can't remember what it's called. The one with the, like the Beast one, whatever it's called.
The Avengers Endgame.
No.
You mean Beauty and the Beast.
Beauty and the Beast, yes.
Well, Mulan has a sequel, Mulan 2.
Okay.
Can't say I've seen it, but you have nailed it. It is
nice.
Beauty and the Beast.
Oh, nice.
There was a live action remake starring Emma Watson.
Yes.
But that wasn't
Yes,
a
yes,
sequel. It was the same movie. Yeah.
Okay.
Yeah, so that's the only one.
And that's their highest grossing
No.
film?
Of their 30
Gotcha.
highest grossing, only one is not a sequel or doesn't have a sequel.
Wow.
So there you go, Beauty and the Beast. You
Mulan
nailed
has
it.
a sequel.
Huh?
Mulan has a sequel.
Yeah, Mulan 2.
True.
I'm not joking.
I know. I don't think I've seen it. There you go.
All right, before we get
Shit.
too far down this rabbit hole, let's start with what Disney is.
Yep.
Disney is a global entertainment conglomerate. It's a giant.
It's huge.
Known for its iconic animated films, theme parks, but really its diverse media empire. It's a $200 billion company. It's one of the biggest entertainment companies in the world. And as we'll get into today, it is the best in the world, I would argue, at leveraging IP and monetizing it in a number of different ways. But let's rewind and let's start back in the 1920s where Disney began.
1923 was when Disney was founded. Now, a lot of people think about Steamboat Willie as the start of Disney. I do think about Steamboat Willie as the start of Disney in 1928. Steamboat Willie, but then obviously when we were young, it was all about Mickey Mouse.
Well, hold on. You mustn't thinking about too much because Steamboat Willie is Mickey Mouse.
Is it?
I'm pretty sure.
I don't actually. You're right. Oh, yeah. Okay. I thought Mickey was a spin out.
No. So that's where Mickey Mouse gets introduced. And that's
Yeah.
like that's seen as like the seminal Disney origin story.
Nice.
But you may not have heard of Oswald the Rabbit or Oswald the Lucky Rabbit.
I haven't.
Now, if you Google Oswald the Lucky Rabbit,
Okay.
what you'll see is it looks remarkably similar to Mickey Mouse.
Googling it now.
Yeah.
Very similar.
Yeah.
In fact, I would... Yes.
So Oswald was made by Disney and his business partner for Universal. And they made a number of animated Oswald the Lucky Rabbit cartoons.
Having already made Willie the...
No, this is
Okay.
pre-Mickey. So this is
Okay.
actually the start of Disney.
Okay.
And then Universal weren't giving them a good cut. I think they were giving them like 20% or something. And they eventually were like, screw this, we're doing it ourselves. And they went from Oswald the Rabbit to Mickey the Mouse. But if you look at them side by side, they do look remarkably similar.
Yes.
But anyway, the start of Disney was animation in the 1920s. Oswald, then Mickey, and then from there. By the 1940s, they moved from animation to live action. The 50s, they're into theme parks. And then the founder, Walt Disney, dies in 1966.
And so to be clear, live action is like real people.
Real people. Yeah.
Acting out.
Yeah.
Whatever.
As opposed to animation.
Beauty and the Beast.
Yeah.
Yeah.
Nice. One other thing we're going to realize as we do this particular episode is your lack of pop culture knowledge.
Yes.
So Disney dies in 1966 and the company goes through a bit of a lull. Like it struggles a bit directionless after that. That really changes in the 1990s. And this is a period known as the Disney Renaissance. And we all grew up, well, you and I grew up in this period, and it was a golden age of Disney animation. And it was really led by the CEO at the time, Michael Eisner.
I remember the good old days of Saturday Disney. Do you remember Saturday Disney? Saturday morning.
Oh, yeah.
6 till 10, they just did cartoon after cartoon.
Yeah, it was good.
Free to air.
Yeah.
Yeah, so good.
So good.
Mickey Mouse. Anyway, so Michael Eisner leads, as you said, the Renaissance through the 90s. And then Bob Iger takes over in 2005. And having read his book, big fan of Bob, but he was known for a lot of acquisitions through this period of time that really grew out the stable of, I guess, media production. So he bought Pixar from Steve Jobs, Marvel, Lucasfilms, and 20th Century Studios. So huge period there that really took Disney to the next level.
In 2020, Bob Iger steps down. Bob Chapek, who was running the theme parks division, comes in. But Bob Iger was... I mean, this is all alleged, but it's pretty clear what happened. He was always sort of undermining him a little bit, stalking him from the board. Eventually, Iger gets reinstated in 2022. And I think if we think about the company today, it is a company that is struggling. It's a massive entertainment conglomerate with a lot of questions around it. And I think that's really where we want to focus today. And I guess also the conversation we're about to have with Hatem, it's what next for Disney, because it's been incredible for so long.
It wasn't too long ago that it was actually at 10-year lows.
Yeah.
So it's kind of at the period of Bob and Iger coming back in and streaming, which we'll get to, and
post-COVID.
Post-COVID has been a real battle for them.
Yeah. So before we get too far down that rabbit hole, Disney today, 3 massive operating divisions. This is how it splits its company. There's entertainment, which oversees the full portfolio of entertainment and content businesses, including Walt Disney Studios, Disney General Entertainment, Disney Streaming, Disney Platform Distribution. And just to give you an idea, of each of those subdivisions, if we just look at Walt Disney Studios, under that, there's Walt Disney Pictures, Walt Disney Animation Studios, Pixar, Marvel Studios, Lucasfilm, 20th Century Studios, 20th Century Animations, and Searchlight Pictures.
It's huge.
So they're each these massive companies in their own right. And that's just one subdivision of a subdivision of one of the 3 big divisions. That sort of gives you a sense of how big they are. Or, if you take their TV division, here's just a list of some of the companies under that. ABC Television Network, Disney, the cable channel Disney, Freeform, FX, Fox, National Geographic, Star, and then also the ABC television stations and A&E. So it's there's
Massive.
a lot.
Yeah, it's huge.
So that's entertainment.
Yeah.
Then there's sport.
Yeah.
Now that's... all of their sport inventory headlined by ESPN. They've also got massive sports channels. They've got a big one in India. They used to own a lot of the cricket rights there. So they've got a pretty big portfolio of sport around the world, but really underpinned by ESPN. And then finally, experiences. And this is all of the other ways that they bring their IP to life, from theme parks to resorts, cruises, vacation experiences, consumer products, books, video games, clothing and apparel, all the other ways that they monetize their IP.
Huge amount of money in that parks business. Massive. They should focus on that. That's their core.
Are you kidding?
Yeah.
Parks?
Yeah, theme parks. Honestly. Anyway, that is the magic of Disney. You mentioned their IP that goes into these experiences and leveraging all of that. And you said at the top, Ren, that the magic of Disney is in the IP, because what they can spin out of it and I guess the value that is within it is just incredible. And they are able to monetize it in so many different ways. So let's use Star Wars as an example of how they monetize their IP. So we start with the movies, Star Wars movies. Then we've got Star Wars TV shows. Then there's toys, video games, rides at the theme parks. stage show.
Yes.
That would be weird.
We should be clear. We're not making these up. These
Yeah.
are all real things that they do with their Star Wars IP.
Yeah.
There is the Star Wars stage show was called like in a universe far, far away or something like
Is
that.
it a musical?
Oh, I don't know, to be honest.
Star Wars Weekends. So Weekends Away.
Yeah.
Star Wars thematic.
Thematic, yeah.
Then you've got Star Wars, which is part of Disney on Ice. And there is also a Star Wars cruise called the Cruise the Galaxy with Star Wars. There's a Star Wars theme hotel, but it is now closed. Reports it costs up to $5,000 for a 2-night stay. Unbelievable.
Yeah.
What is missing in here, I think, is didn't they build Star Wars themed neighborhoods?
Yeah, so they do Disney themed neighborhoods. I couldn't find a Star Wars specific one,
Right.
but that's a whole other thing we haven't spoken about. I think there's one in Los Angeles. They've tried it a few places, I think. It's like, this sort of Stepford Wives, happiest place on earth, perfect community.
Yes, freaks me out.
Yeah. But yeah, they're like in the construction business. Yeah.
So I guess the point we're trying to illustrate here is that this is just one example of how they've taken the IP from Star Wars, very successful movie franchise, and pushed that across many different, I guess, media assets. And this story plays out time and time again. You think about Marvel, you think about Disney characters, you just think about everything that they've created in the universe and how that this is really how they leverage that IP.
And it's the reason why they've been the biggest entertainment player. If you compare them to some of their older contemporaries, like a Paramount or something like that, they made just as good movies. Like there was some incredible IP there as well. The challenge was they weren't as good at then finding all these different ways to make money from it. And in particular, building that fat tail of monetization. Like if you think about most media and most entertainment products, like take us, for example, we have to keep making podcasts to keep making money. And Paramount had to keep making movies to keep making money. And they could have a hit, but that hit really made money for them while they were in cinemas. And then traditionally there would be a little tail of DVD sales. Whereas what Disney did was their tail, it didn't even tail off. Often it would get fatter. Like they would make more money from the toys and the video games and the stage shows and whatever else in year +2 and year +3 than they would from the initial theatrical release of some of these things. And that was just their absolute power and what they did better than anyone else. And that hasn't gone away, but I think others have caught up, and a lot of the spaces that they're playing in are getting more competitive.
Yeah. All right, Ren, well, let's turn to their financials. So we'll start with the most recent 2023, they had revenues of just under $90 billion, $88 billion. For the past 3 years, post-COVID, they've had revenues of $67 billion, $82 billion, and $88 billion. So slower revenue growth. They are profitable, turning a profit of...
Slower revenue growth?
Well, I mean,
Dude, they've gone in
3%, 22%, sure, that was COVID rebound.
No, but if you go back
7%.
if you go back 8 years, they were making $50 billion a year. And then by 2020, it was $65 billion a year. And now it's almost $90 billion.
Yeah, but the revenue growth has somewhat stalled.
Yeah.
Do you know what I mean? They're not...
In 1 year.
Well, I don't count 2022.
I think the really important thing when you look at these numbers is there's been a massive step up that coincides with the launch of Disney Plus.
Yeah.
And that is the reason why that revenue is so big. Quarterly, they're now making about $6 billion in revenue from Disney Plus. And so, you annualize that $6 billion, that's $24 billion. And you look at the step up between 2021 when Disney Plus launched and today, and it's 22 billion. So, that step up is essentially the Disney Plus bump.
Yeah.
The challenge though is it's not profitable revenue.
Yeah.
Yeah.
So just to give a breakdown based on the segments you spoke about, or the businesses earlier. So about 20% of, 21%, as you said, of revenue comes from Disney Plus, fastest growing percent. Then there's about an even split between ESPN, ABC, Disney Channel, about 35%, and also Parks and Experiences is also about 35%, with the remaining through just various bits and pieces. But yes, very fast growing from Disney Plus.
So I think really where this unprofitable growth story plays out is in the profit line of their revenue. So pre-COVID, they were making sort of high 50s, low 60s in revenue, and their profit margin was in the teens or the 20s, 17%, 16%, 21%, 16% in the years 2016 to 2019. And so that meant they were making around that $10 billion a year mark in profit. They launched Disney Plus. They go all in on this growth strategy. Obviously, the post-COVID numbers are also clouded a little bit because, theme parks were shut down, cruises were shut down, so that also hurt profitability. But if we look at the most recent year, so 2023, their profit margin was 2.6%.
It's crazy.
So they've gone from doing, and these are rough numbers, but to give you an idea, they've gone from doing $60 billion a year in revenue and $10 billion a year in profit to doing $90 billion a year in revenue and $2 billion a year in profit. And that is one of their biggest challenges right now. How do they make this business profitable? Like, how do they make this growth profitable, this incremental revenue profitable?
Get rid of it.
Well, they can't go back.
No,
That's
I know.
the thing.
They're too deep now.
So I think
Sell off some assets.
I think that's what we want to talk about with Hatem. But as we just close out our sort of introduction to the company, I would say the big challenges for Disney right now are Disney Plus, the streaming service. How do they make that profitable? And then their legacy businesses, particularly the cable channels. What are they going to do with it? Because the cable business, like Foxtel in Australia, and then all the different ones over in the States, they don't have a bright future.
No.
Yeah.
There was talks to sell them off at some point, wasn't there?
Yeah. There's talk that they're going to sell ESPN. There's talks that they're going to sell
Really?
all the cable channels.
For me, ESPN feels like the one valuable asset you want to hold on to.
But the thing is, a lot of ESPN's revenue comes from these cable fees, like the cable companies like Comcast and stuff paying them.
Yeah.
But sports rights are getting more expensive. Like, there is a fascinating deep dive that we could do on the battle for the NBA's rights at the moment. Disney through ESPN in the current deal, pay about $1.6 billion a year. And then Warner Brothers Discovery through TNT pay about $1.2 billion a year. So that's $2.8 billion. All of the big streamers are now... So the 10-year deal's almost up. So they're negotiating now. All the big streamers are throwing money at it. Apple was super interested, but apparently Amazon has been so aggressive. They reckon that Amazon's going to pay more than the annual deal value for some of the games. They reckon they'll pay over $2.5 billion. Disney are going to have to pay more and get less. Warner Brothers might not be able to afford to play.
Wow.
ESPN is super valuable, but what they produce is getting more expensive. And what they earn as people cut the cord is getting less valuable. Wow. If that makes sense.
Yeah. Wow. Fascinating.
Yeah. Anyway, completely different conversation.
Yes, we'll keep that as an industry deep dive. Well, it's not really an industry deep dive, but the sports rights. Yeah. All right, Ren. Well, I think that is a great place to leave it. Well, welcome back to Equity Mates. We're here doing a deep dive on Disney, and it is the time where we bring in an expert to help us understand the investment case. So it is our absolute pleasure to welcome Hatem Dhiab, founding partner at Gerber Kawasaki. Hatem, welcome.
Hey, thank you for having me on. It's good to be on.
Yeah, we're excited for this one. So we want to start with how to analyze Disney. It's a huge business, multiple business streams. So what are the key metrics that you're looking at, and talk us through how you break this down and analyze it from an investment point of view?
Yeah, absolutely. So, when you think of Disney, as you said, there is so many different businesses, right? But right now, the whole focus is on their direct-to-consumer business, right? Which is basically, can they become profitable, or can they make money from their streaming services? They have basically 3 different streaming services. They have Disney Plus, they have Hulu, and they have ESPN. And those have been new businesses that really built over the last few years in the kind of dawn of streaming, and they've been massive, massive money losers. And in a time where their traditional TV business is going down, they really need to see that streaming business kick off and really start generating some meaningful earnings, so they can make up for the linear TV losses, basically.
Mm.
Now, we've just had Disney report, and there was some good news on that front, which is
Yeah,
Disney Plus turned a profit for the first time. The whole
yeah,
streaming division didn't, though. I think it was ESPN that dragged them down. So I
yeah,
guess let's start with the positive, the bull case, then we'll get to the bear case after that. But let's start on the positive side. If you were going to
yeah.
build a positive case for Disney and an investment thesis for Disney,
Yeah.
what does that look like, and what are the sort of the key pillars that you'd be looking to as an investor?
Yeah. So it's very important to say that it was operating profit, not free cash flow, right?
Nice.
You can play with those numbers a lot, right? If you think Netflix has been losing money for a long time and they turned on that free cash flow whenever they needed to. And obviously Bob Iger and team there knows that this is what Wall Street is looking for. Our bull case is this digital transformation happens in a way that is very successful, just like Netflix has done, right? Disney has some of the best IP out of any company out there, some of the best storytelling, but they haven't really been as successful in kind of monetizing that IP in their streaming services, right? So I think that the massive bull case is, can they become this digital first company that also has the ability to use the same IP into their parks and really all the other things that they do. And then two, we over the last couple of years, we haven't seen any big movies come out of Disney. We haven't seen, first of all, the movie theater sector in general has been struggling, but we haven't seen any big hits. So people are wondering if have they lost their creative mojo. So the bull case for us is, can we see some blockbusters from Disney, and can we see that Disney Plus and that Hulu come up with some massive hits?
And I guess the follow on from that then, Hatem, is, do you believe that they can become the digital company that you're talking about? Like, what's the probability?
My office is in LA, and I have to work with a lot of people in entertainment. I would not bet against Disney. It's been a rough 10 years in general. Nobody knew there's going to be a COVID, right? Really, you have streaming, which is a massive disruptor in itself, and then you have COVID, which disrupted their other businesses. So like Disney had to navigate some really treacherous times over the last 5-6 years, and I think with Bob Iger, he will be able to almost reorient this whole company and kind of go into the streaming dawn, basically.
Now,
Nice.
now I think the streaming side is one side of the reorientation. The other side is what happens to the legacy businesses, and in particular
Yeah,
the cable businesses. So
yeah.
where do you see that their future?
I mean, cable business is done. I mean, like who watches ABC anymore? I think and it's still, by the way, their number one streaming service, and there may be some millions of people that watch it still. However, I think the trajectory is known. It's negative. They're losing a lot of their legacy payment from the cable subscribers for ESPN, for example. So a lot of that, the legacy business is really going down. That's why I said the streaming and DTC is really where the future is going to be. And by the way, that could be a lot. There could be a lot more profitable. There's going to be a lot more margin in there. So.
And what about the idea of the sale of ESPN? Like, where does that factor into things?
Oh man, that is the $100 billion question, right? I mean, first of all, sports are so important. Like the only reason people watch TV right now live is because of sports, right?
Mm.
I know I was in Australia a few months back. Rugby is massive there. But football here, or even college sports and so forth. And Disney on NBA right now, we have the playoffs, right? Disney has the rights for the NBA playoffs, and that's really a big driver for viewerships. So I think if they are able to, and what they said is they're going to, ESPN will become its standalone app where you can watch a ton of sports, you can bet on it. So there's going to be a lot more interactive content to be able to do things. And if they're able to successfully do that, I think ESPN could be a massive, massive business. I don't know if they will spin it off because I think it's important to the whole Disney ecosystem to be there. But I think it's going to be an app on its own that is going to be very profitable.
I've kept saying it a couple of times in the show to Ren, and it kind of laughed off. But what about the parks part of the business? Like it's an enormous part. Where does that factor into the thesis?
What, the parks is, first of all, I think, consumers are slowing down, but parks are as busy as they ever are. I just learned last week that they're installing a maternity ward in their park in LA where actually you can go and have a baby at Disneyland now. So it's pretty. I mean, people love
What?
Disneyland. Yeah, I know. I couldn't believe it either. But I think the parks, the genius of the park, right, is you build this awesome IP, and then you can monetize it either in a Star Wars experience or a Bluey experience, whatever whatever IP is successful, they can create like a real life experience that can really generate revenue for many, many years over and over. And that's really the genius of the park. And I think a lot of people really like to go and experience these things, so it's a great family fun. It's they have them all over the world. So I think the park has been a great free cash flow provider and will continue to be. For last earning report, they talked about that spend has actually gone up per user, and not only the number of visitors has gone up, but actually how much money they spend at the parks has gone up quite a bit.
That's because Disney have these crazy ways of charging money these days in those parks. That's ridiculous.
Yep.
So Hatem, if we sort of tie a bow on the bull side of the story, we've got streaming has sort of taken rough Disney from a $60 billion a year revenue business to $80 billion a year, and the question is, can that be profitable? So the first leg of the bull thesis is they figure it out and it becomes profitable and one of the biggest streaming services out there. And then it's just continued good execution on everything else they do. Parks, cruises. We were talking about some of the other things they do. Disney on Ice and, Star Wars themed hotels. Just all of the stuff, the way that they monetize their IP. They keep doing it, but really with a base with this new direct-to-consumer streaming platform. Let's turn to the bear case, or like where the risks are in that thesis. As an investor, what are you watching, and what would be this isn't going well sign for Disney?
Well, the bear case is really what's happened, right? Like we had really tough succession, right? Bob Chapek was put in charge by Bob Iger, and he just completely flopped, right? He pissed off a bunch of creators. They've slowed down a ton of their releases. A lot of the Disney Plus releases were not working. A lot of the shows were not working. They spent too much money on some very big flops. So all these things, all that's cost has really kind of set them back a few years, right? And two, it's a digital transformation play, right? Disney at heart is not a digital company. It's not Netflix. So can they execute on this? And I think that's why we were looking at the streaming numbers to see, can they provide an experience like Netflix? And frankly, their numbers are 40 million US subscribers versus Netflix having 80 million. Globally, they're even less. They have, I think, 140, 150 million versus almost 300 million for Netflix. So they're far, far behind. And that's really the bear case, is they keep basically flopping and keep not executing.
What are your thoughts on Iger coming back, though? Because, I mean, that in itself could be a bit of a challenge. There's no guarantee that he's going to have the success that he did prior to Bob.
Bob Iger is like a legend in Hollywood, man. The guy is, it literally is. Everyone looks up to him. He's done fantastically well at Disney, but he's not perfect. I think you can go back, and hindsight is always 2020, right? But the Fox acquisition was probably not the best thing they could have done, right? Um, Navigating COVID was probably not the easiest thing to go through, but now I think they have actually a fellow Aussie on the board running their transition team, James Gorman, who's the ex-CEO of Morgan Stanley, who's done a very, very successful transition at Morgan Stanley. So I think everyone is looking who's going to take the next job at Disney, right? And there is some pretty awesome contenders for that. And I think Igor made one mistake. He's not going to make the same mistake again. So his legacy is on the line here, and I believe he will succeed at finding the right successor.
Now, Hatem, I've just realized how much of a Disney fan you are with a baby Yoda in the background.
I'm glad you saw that. Yeah.
Nice. So we're definitely speaking to the right expert.
Yeah, totally.
I guess just to close out the bear case as well, and we spoke about the power of the IP and the franchises that they've been able to create, and I guess one of the big successes of the most recent decade or so has been Marvel. I guess the commentary coming from Iger himself is that he's looking to massively reduce the number of Marvel movies that are coming through, and I guess it's perhaps an admission that the franchise is not done, but like the juice has been squeezed. So, do you have any thoughts on where that goes?
No, I agree. I think it's saturated, right? Like there's only so many superhero movies you can see every month. I think I think what he's doing is going to say, "Hey, listen, we made a mistake. There's too many movies, and then let's focus on quality, right? We're going to only make 4 or 5 movies, and they're going to be fantastic." So I think the reality is they are making the right adjustments as far as like how to tweak their content strategies to match this new world. In a time where there was box office and people went to the movie theater every week because that's what they did, right? You needed these big movies, you needed this blockbuster. Now the whole kind of atmosphere has shifted. We all have streaming services, we have many of them. So I think the strategy has to fit the new reality on the ground, and they're doing that.
Well, to close out, if they are able to execute on streaming and sports, where do you expect Disney to be in 10 years' time?
Oh man, with AI and all these kind of disruptions happening in the world right now, I think owning IP is going to be very, very powerful and lucrative, right? And Disney has a lot of IP. I think if they're able to really execute and kind of build the right processes in place, they're gonna continue to be one of the biggest storytellers, and I think stories will always matter. So yeah, so I would bet on Disney being stronger in 10 years than it is today. But it has to navigate through the last few mistakes they made.
Awesome. Well, we thank you so much for taking the time with us today, Hatem. It was an absolute pleasure. Really enjoyed that conversation. So thank you very much.
Likewise, man. Thank you.